This is the Scalpers Gold Trading System. One of our traders, a new trader in the room, had some pretty good questions that I thought I would just cover in a brief video here. And I thank Brian for the questions, because I think they're going to be helpful for a lot of new traders that come into the room. One of the questions he had: when the signal appears with the signal line extending up, but not including the current candle, do we wait for the next candle which actually intersects the signal line to take action? Well, let me give you an example. Actually, I'm just going to pull the Russell 1-minute chart in here, because I think this will cover actually a couple of questions maybe here. Okay, so some of the basics here. Let me just move this over. When our trend here is yellow, that means it's neutral. It means we can go long or short. Now, we've got a long signal at 5:17.70, and we've got a short signal at 5:16.20. So, let's say if the price started coming down here, we could go ahead and place our order, a sell stop at 5:16.20 before the price gets there. So we've got an order sitting there waiting, because we already know we can go short or we can go long. If instead the price looks like it's going to come up to this 5:17.70, go ahead and place our buy stop at 5:17.70, and see if the price comes up and hits it. So we want to have our order already in. So the first time that the price hits the line here, that we can be in the trade. Okay, and another question was, when do these triggers, these signals, expire? Well, here's a good example, because you've got both a short and a long out here. Okay, they are good until you get a new signal that would replace the old signals. If price comes up to 5:17.70 here, okay, that negates 5:16.20. Basically, you eliminate that, and you wait for the next signal. In this case, you'd be long 5:17.70, but if instead it comes down and hits 5:16.20 first, then 5:17.70 is out. In other words, that's no longer a valid signal. You got to wait for a new signal. So that's how you handle when you get two signals out at once that haven't been, either's been hit. They're still both good, and if there no new signals come out, and price hasn't hit 5:17.70 or 5:16.20, just like this has happened here. These prices or these orders are good until you get either a new fresher order, or until price hits one or the other here, and that will eliminate one of those. So these are good for as long as they're out there until a new signal comes. For instance, it looks like we've got two blue dots forming on our scalper line here, so we may get another new signal generated, and we'll see if that happens while we're sitting here. I'll look for some of the other questions. Okay. So we got in this case, printed a blue dot. So 5:17.70 is still a valid long signal that hadn't been hit yet. The trend is still neutral, and basically it printed a blue dot saying it's not enough momentum, I guess, to generate an actual new buy signal. So it just generates a dot there. The dots come out. Those are basically areas for stops. So if you happen to get long 5:17.70, Scalpers Gold is going to generate either a red price print or a red dot indicating where your next stop needs to be. Kind of give you an example here. Well, I guess this is potash. This happens to be Alphanews expiration Friday, and it's lunchtime here, so things are pretty slow. Don't expect that they're going to go anywhere, but potash here had a long 92.81. the trend was neutral there, so it was okay to take a long. Let me expand this, and we'll just wait and see if the we watch the scalper line. As long as the scalper line is blue, you can stay along. When it starts turning red, when you get a couple of red dots in succession, you're going to get a stop. So we'll watch that one and see when a stop comes in there. Now, there was another question in regards to trading stocks. If that's maybe a better way to start with the system, and that it is a good way to start, I think, because when you trade the futures are easy to trade, but like a day like today, an options expiration, it's a day a lot of traders take off trading the futures because sometimes they just don't go anywhere. But there's always a stock moving. You can find a stock like potash if you want to go back. Here we might get our little example here of the stop. See, the trade started with blue dots on the scalper line. If we get two consecutive red dots here, we know the system is going to print a protective stop for us here. So in a stock like pot, your emergency stop would be about 30 cents initially, until the scalper's goal generates a new closer stop. And this is based on price, action, time, and volatility. So it tries to put those stops in the. Okay, so you got a red dot. So there's your stop is just below this bar, and you're going to basically pull this in here. It's going to be a couple of ticks below the low of this current candle is where your stop needs to be. Can't be any closer than 2 ticks. So the low of that bar is 92.71 or candle. So 92.69 would be your stop here. So about 12 cent stop. So you go from an initial emergency 30-cent stop to 12-cent stop. And if this trade progresses and it continues to move higher, the stops will move up to keep you in the trade and kind of trail up that way. So anyway, stocks can be a good way to trade. You just have to make sure you find stocks that do move, that have a decent a range or ATR. The higher priced stocks like potash, you might need an emergency stop of 30 cents. Smaller stock, maybe a $50 stock, you might require a 20-cent initial stop, emergency stop. An $18 stock, some of those smaller stocks, maybe a 10-cent stop or 11-cent stop, emergency stop, until the scalper's gold, does this, prints a new stop for the trade based on time, price, and volatility, and so forth. So so this trade is been as high as just a little better than a 20-cent profit. Is as good as it's gotten so far. Again, this is lunchtime options expiration, so we're not expecting much. But you can go back here and see. Here was a long trade, 91.47. You see the trend was long. Here we had a short signal. Could have been a stop on a previous trade, but we don't go short on this because the trend is long. So we're only looking for long trades, and it hits there at 91.47. And you can see there's no stops here. It's just saying, this whole time it's just saying stay long. You had one red dot here, but not 2 in a row. You don't hit 2 in a row till you get way up here. So there's your stop here, and that finally did get hit. And that was that trade went for $2.11, I believe that was. So very nice profit on that trade. And so basically, as soon as you enter, if you had a long at 92.81, as soon as you enter that trade, you set your 30-cent stop. So if emergency, disaster, anything happens, you're out at minus 30, but no larger. Until, like I said, here our scalper's gold told us to move that stop up to 12 cents. to a 12-cent stop. So we immediately cut the risk down, but we still give the trade room to work. And we just wait, and if we get another couple of red dots on the scalp line, we're going to get a new stop. Anyway, I hope that answered the majority of the questions there. You can see here we got this new stop came out 92.81, so your stop is basically at break even now. If you wanted to get below 80, you could put it at 79 if you wished. But anyway, that's telling you that's as close as you can have your stop now, is at break even 92.81. All right, hope that's helpful.